Okay, so this is not one of my better looks, but uh, when you're walking outside, this is what you get. I am actually here not to talk about my appearance, as beautiful as it is right now. I am here to talk about what's happening in the markets. Kind of scary, right? Yeah, we all got beat up badly. In fact, we've been getting beat up for longer than it seems, despite the highs in the market since the Fed announcements on October 3rd, where they sort of pulled back on their quantitative easing, you might say, but rates, and pointed to higher rises, a strong economy. Since then, there's actually been a lot of correcting going on, and a lot of us have been getting hit pretty bad. Quite frankly, yesterday the worst. But here's the thing: I think I think there's something more to it than we hear in the general news, because literally, you know, they just don't go as deeply as I like to think about it, and I thought I'd share thoughts with you. So first of all, this is a lot about China. We need to get China to the table, and this may be what did it. They are in bear territory. They are down back to 4 years ago. I mean, imagine if our stock markets were back to 4 years ago. Think about that. We would be, I don't exactly know off the top of my head, but we would be below 17, maybe even down to 14. So the point is, that's enormous for them. And last night, they got hit with over 5%. Okay, China's Shanghai, Hang Seng, Taiwan too. All of them really got hammered, and the pressure is on for Xi to come to the table at this point. He's going to get it from his party. He's going to get it from his many millionaires and billionaires, and he's going to figure it out himself. This is no way to handle the disagreement. They can't be, blind or silent any longer to what are genuine issues that not just Trump has expressed, but the entire world that trades with China knows very well that they are guilty of. And so at some point here, it's clear that Trump is not giving in to their standoff behavior. And he understands that this is his one chance to make a change with China. And frankly, if China doesn't change, what's going to happen? What's going to happen is production that's in China is going to move to other countries where he is going to make deals. He may make a deal with India. He may make deals with other countries like North Korea, although that's China controlled. But he's going to move production. American companies will move production to other countries to some degree. And it won't go back as quickly as China would like it to. They want to move to a more consumer-based driven economy. So they need production there for their own people. And so American companies do want to stay there. But they can move technologically sensitive aspects off China territories so that technology transfer and the intellectual property theft that does go on can be better managed. But that's not good for China. And so they really have to start to revisit in good faith some of the things that Trump is asking for in negotiations. They hadn't even been willing to talk about it. I think a 21+% pullback with no hope in sight, maybe even worse, ought to be enough to do it. So that's what I'm hoping for. Furthermore, interest rates are not out of whack historically. They're not out of whack in the context of inflation or the strength of the economy. But where they are out of whack is in context to the world. So when you look at interest rates around the world, U.S. rates are so strong, okay, that they are creating all sorts of problems. I won't go into them, but it's creating all sorts of problems, from dollar strength to dollar-denominated debts to many other things. So it's really a challenge for the Fed right now. On the one hand, this is probably about where interest rates ought to be, but they're not supposed to be causing damage to the economy, and I think at this point they are. So it's a real tough tough line that Powell has to walk. doesn't like to look like he's being manipulated or persuaded or influenced by the president, so that's probably a difficult dilemma for him. But I think he can find some language here. I think he will. And I think it's important that when he does, it's data-driven language, not he won't even acknowledge the president, I doubt. It'll just be helping investors to recognize the thinking of the Fed is logical and is good for the economy in some ways, good for seniors and others, and ultimately that the strength of the economy will be just fine, and that equities will do just fine. So this is really a pullback. This is a correction. This is this is what we need. We haven't had a 1% decline in a lot of markets in a whole quarter, I don't think. This is we've had a lot of consecutive days of declines recently. Technology and some other momentum plays have been battered, and right, possibly they should have been. So this is this is probably healthy for the markets, but it's painful. It hurts. It's a test. If you're invested, you're invested. I mean, that's just the reality. That's what you have to do. You have to suffer through this. If you have cash, if you've been on the sidelines, guess what? You're in luck. You've been given an opportunity. You've been given a reprieve. Well, what are you going to do with it, right? Well, you may not do anything with it, but I'll tell you what, there's a lot of cash out there that has been on the sidelines, and a lot of smart investors who know what to do with it. And so that is the bounce back. Today, probably not. Probably wouldn't be good if it came today. But, the technical rules still apply. So we'll see what happens, but that's my part of my opinion on it. Just take it for what it's worth. Which is, if I look at my stocks, it's kind of worth negative right now. I'll see you.